You know, if we basically shut the stocks down, will you lower the price because we don't have the money to cover it? And I kind of do believe that, you know, to be honest with you,
I
you
mean,
know,
that
but
that probably yeah, that most likely happened,
yeah,
with
100%.
all those trades going on. At the same time, though, just being a company that's not able to pay off those debts and
Yeah,
shut that off,
right.
that is not good either.
I wake up, flex, thumb down that check, no drip this, wet. Tell 'em run it up, no sleep, no rest, might crash, might wreck, but first I
3, 2, 1. What's up, everybody? Welcome to the 2 Feet In Show. I'm Mike. I'm here with Kenny. What's up, Kenny?
What is going on, squad? You know, it's funny. We just had an amazing Clubhouse, and that app is so killer, man. It's awesome.
Dude, that was crazy. So basically we just opened it up, invited
Mhm.
a couple of our friends,
Yeah,
and they're already talking. They're already asking questions. You probably
yeah.
made a sale.
Oh yeah, for sure, 100%. Just getting on, talking to people, and just moving and shaking, man. It's a crazy app. It's awesome.
So
100%.
if you're not on it, find someone that can invite you in, and then there you go. Just
Go from there.
network.
100%.
It's a great networking tool.
Yeah, it really
So
is.
yeah. What else are we gonna talk about? That kind of
No,
that kind of threw us off for a loop
I
because we
know,
because
not really,
we were
but you know,
planning.
it,
What were you gonna say?
it kind of segues into our first topic, which is basically Elon basically did his first Clubhouse, and he was talking to the CEO of Robinhood. How massive is that?
Oh, that's right. That's right. That's right. Okay. Um, let's get into that. So I'm going to share my screen here, and so the previous episode. This is episode 4. The previous episode, it was I was trying to explain and like what was going on because it was so new, so I didn't really understand it. So I did a little bit more research
Okay.
on the timeline of everything from you know the from GameStop, how investors started to invest in that, and how it got to where it is now. And Robinhood is in big trouble. Um, so I don't know what's going to happen there, but people are talking bad about Robinhood right now. So we're going to
Absolutely.
see. But let me share
100%.
my screen real quick, and you can see.
Yep.
Ken. Okay,
Yep.
cool.
Absolutely.
So this is on the Hustle, and this is an article titled GameStop, the CEO, the Redditor, and the Billionaire Backer.
Yep.
And basically, I'm going to go start with the Redditor. This is the guy, he's on Wall Street Bets, known as Deep Effing Value. And he also has a YouTube channel with the name Roaring Kitty. His name is Keith Gill. And he kind of is the one that started this whole GameStop craze, and this is per Routers.
Yep.
And he's a 34-year-old that lives in Boston, formerly worked at an insurance firm, Mass Mutual, as a
Uh-huh.
financial advisor. He made his initial 53K bet on GameStop in September 2019, and the position is now $48 million. Yeah, and I looked at some of his videos on YouTube. He's a smart guy. Like
Okay.
he had a really good analysis, and he started on this way back in 2019, when the value of the stock was really low.
Yeah.
And he got in it, and he held on to it because he did his analysis.
Hmm.
And like I said before, it's different now from all those people that are going in when the stock is high because of the hype. There's a difference there.
Right.
So there's like that, I don't know, um, there's that duality, right?
Right.
That a lot of
Yep.
traders kind of get skewed. So anyways, aside from that, there's those that were smart about this and others that just went in for the hype. But
Right.
then there's others that went in because they wanted to, stick it to the big hedge funds,
Hmm.
which the hedge funds are, from what they were doing with GameStop and shorting it, it wasn't good either.
No, not at all.
So I'm going to go here. So this is on the channel All In Podcast that I found, and this his name is Chamath Palihapitiya, former exec at Facebook, and now he runs his firm Social Capital, and he knows his stuff. So right now he's going to kind of break down the whole Wall Street Bets GameStop story. I think he broke it down pretty well, so I'm going to play it here.
I had actually a guy on my team put together 2 really important documents, and I'm just going to read them because it's full of so much interesting shit. And then we can talk about
where are these documents from? You're saying from the Wall Street Bets?
No. I had a guy go in, one of my team members, one of my colleagues, and go and summarize the entire saga from the beginning. And then we can talk about the corporatist scumbags at Robinhood and other fucking people over. So let's do that in that order, okay?
This is why they call him the dictator.
Let's start with
read your biased and
no, shut up,
boring
Listen,
document. Go.
You're an idiot because you just want to defend people because you blindly stumbled into a fucking trade that actually made a little money. Lo and behold, you actually invested in a company that literally they got on television yesterday and they fucking lied to Americans right to their face. This is a company that was insolvent because now let's just put a pin in the following data point, which I believe to be true. I know more about this than you do because I live in these markets. Okay, so I understand what it means to be putting on trades, to being short, to being gamma squeezed, to have longs, to do all of this risk management. You're an early stage investor. So I know the intricacies of this stuff and what's happening in here. This company was insolvent. They did not have the capital requirements to post the margin that was being asked of them by their partners. And so this was a platform level decision to ban and block people from trading securities. It cost individuals hundreds of millions, probably billions, maybe even tens of billions, and these motherfuckers should go to jail. Now, let me give you the timeline before we get into that. June 2019. In June of 2019, a Wall Street Bets user named Deep Fucking Value began buying long-dated January 21 calls. What that means is in June of 19, this person was betting that the stock would go up by January of 2021. He spent $50,000, which, by the way, today is worth about $25 million.
By the way, Chamath, we should just highlight that there are forums where individuals that are trading stocks talk to each other and share tips and promote things to one another. That's where this was taking place.
Yeah, and by the way, those forums exist in the professional organized world too, amongst hedge funds. You know, I've been invited to idea dinners where we all get together and we talk about the ideas that we have, and we're all expected to do fundamental analysis. But some of those ideas are actually momentum-driven ideas. And a lot of the biggest dislocations in the market, just as a setup here, have been because of momentum-driven trading by organized capital. Okay, so we've been stuck with this for a while. So this guy, Deep Fucking Value, posts this, and every month since, he's posted a screenshot of his position, and he's titled it GME YOLO Update. August 22nd of 2019, Michael Burry, who is this guy famous from The Big Short, who's the guy that caught the mortgage thing, he discloses a 3% position in the company, and he highlights that 90% of GameStop's 5,700 stores are free cash flow positive. That's like pretty good. He urges a buyback, and he notes that the company was trading at or near net cash levels. So he's making a deep value oriented fundamental thesis as well.
Chamath, I think also it's worth saying what GameStop is, because even my wife asked me what the hell is GameStop last night. GameStop is a retail store where people buy video games. I used to go to the mall all the time and buy video games there, and consoles and headphones and other stuff.
And they'll buy back your old games.
And so the stock got beat up over the last couple of years as people stopped going to malls and stopped buying stuff in stores, and everyone thought the company was going to die. And so these guys observed that maybe there's real value in this company and it's making money.
Digital downloads are now the standard.
No one buys DVD ROMs anymore or anything like that. So
and the Chewy founder, who is very successful at e-commerce, came in to run the company.
Yeah, that's the best part of the story.
So June 19 was the original post. August 22nd of 19, Michael Burry comes in and says, I'm long. Then a year later, August 31st of 2020, Ryan Cohen, who's the founder of Chewy, takes an almost 10% position in GameStop. About 2 or 3 weeks later, on September 19th of last year, a member of Wall Street Bets writes a post on GameStop, and he notes that GameStop has 120% short interest, which I'll get to in a second, so hold on. What does that mean, 120% short interest? And he defends the company as a result of a few things. He says, number one, there's a new console cycle coming, just as Jason mentioned. Number two, consoles are not going all digital immediately. GameStop loyalty programs have 55 million users. They have a strong balance sheet. Ryan Cohen just bought a stake. And the shorts were underwater and would be forced to cover if the stock ran up. He predicted the convergence of all these factors would lead to a big squeeze. Now, November 16th of 2020, Ryan Cohen writes a letter to the GameStop board, and he urges the company to conduct a strategic review and share a credible plan to capture market share in the gaming industry. He said that they need to evolve into a technology company that delights gamers and delivers exceptional digital experiences. I'm just quoting here. Not remain a video game retailer that over-prioritizes its brick-and-mortar footprint and stumbles around the online ecosystem. November of 2020, someone in Wall Street Bets highlights that a hedge fund called Melvin Capital was going long GameStop puts. What does that mean? That they are synthetically shorting the stock by buying the right to sell it at a different price in the future, okay? And that they had been long that position for more than 4 years. So all the way going back to 2016. Fast forward to now 2021 of this year. January of 2021, GameStop strikes an agreement with Ryan Cohen and adds him to the board of directors and gives 2 of his affiliates, his former COO and CFO of Chewy, also 2 board seats. They collectively, bring their experience in e-commerce, online marketing, finance, and strat planning. The stock goes up 13% on that day and closes at about $20 a share. 1 day later, and then over the next day after that, so for January 12th and 13th of 2021, there's a ton of activity around GameStop in Wall Street Bets, and now in Discord, and in StockTwits, claiming that Ryan Cohen is going to be the savior. And then by January 14th, so 3 days later, the stock closes at $40. So now it's up 125%. So now comes the setup, the pros versus the Joes. From January 12th to today, there has basically been a battle by institutional investors on one side, shorting GameStop, and retail investors on the other, buying the stock and also buying the right to buy the stock, or what's called call options. And this is what has created this crazy nonsense we've seen.
So I'm just going to pause it. So basically when they say institutional investors, they mean like the hedge funds and like the big companies and stuff like that. And then when they say retail investors, it means like everyday people like you and me that aren't in like those firms.
Yeah, it makes sense.
So on the institutional side, after retail drives the stock up, the institutional guys are like, hey, wait a minute, Ryan Cohen's an idiot, this company is fucked. Fuck these guys. They have too many, cyclical and secular tailwinds. And they become so massively short that the infrastructure that's supposed to even count all the shares can't keep up. And now they are short more than the actual number of shares that actually exist. So now they're 140% short. The Joes, retail, they start to aggressively purchase all these call options. And on January 13th and 14th, this price keeps ticking up. Then a bunch of quant funds and momentum hedge funds notice all this activity, and they also participate on the long side. And then over the past 7 trading days, we have traded over $100 billion of stock in GameStop, which is well in excess of what retail can support. So here's what's crazy to realize. A bunch of value-oriented, non-computerized, non-quantitative hedge funds short. Retail notices a dislocation, initially fundamentally, but then momentum-oriented buys. Other hedge funds realize, also buy, and this is what's created this massive short squeeze. On January 19th, Citron Research, a research firm that basically tries to find shorts in the market, announces that they were short GameStop, and they gave 5 reasons why it should go to $20. The stock was at $35.50 on January 19th. Then over the next 2 days, GameStop calls hit an all-time high, and it runs a 2-day rally of almost 70%. And this is what really starts what's called a gamma squeeze, okay, which is what we saw in the first part of this week. So January 25th, Ken Griffin, Stevie Cohen, they inject almost $3 billion into Melvin Capital, the firm that was short, $2 billion from Citadel and $750 from Stevie Cohen. Stevie Cohen had $1 billion in it from before. And then now all of a sudden the squeeze keeps happening. The squeeze keeps happening. And then it starts to spill over to the rest of the market. Now all these hedge funds, these original hedge funds, they are getting called by the bank saying, hey, wait a minute, you've run over your collateral limits. You need to post more collateral. We need more money in your bank accounts. So now not only do they have to cover GameStop, they have to cover all their other shorts. So those go crazy. And they have to sell their longs. So now they're selling, Facebook, Netflix, Alibaba. So those things are going down. That accord.
So basically when he said that, selling like the longs, meaning just like their normal investments, like if they're investing in Facebook or Apple for them to like go up, like they weren't shorting it or anything, just to pay off, the debt.
Got it. Okay.
Guardian is what's been happening in the market in the last couple of days. And then the coup de grace is what happened on January 28th of 2021. Brokerage firms, and this is where, Jason, we should talk about this, like Robinhood and Interactive Brokers, because in fairness, it wasn't just Robinhood, prevented their users from buying GameStop and a handful of other stocks. They were only able to sell, which resulted in such a one-way pressure, it caused a 44% sell-off yesterday. Now, that's been reversed today.
Oh, shit.
And so what it speaks to is a bunch of questions. There are questions as to whether or not this was mandated by the platforms or the regulators. Given the fact that it didn't impact all the brokerage accounts, it was a platform-level decision. So some organizations like Robinhood banned it. Some organizations did not. And it could be that some of these platforms that banned it is likely because, and this is where we get to the insolvency question, didn't have enough margin. And so they knew that if they opened the doors, there would be a run on the bank and there would be a run on Robinhood. And that's why they basically, I believe, had to stop allowing people to trade. And it just shows how fragile the whole system is. The last thing I'll say, and then we can talk about this, is how does Robinhood make money, which I think is also important to understand at this. Robinhood makes money through a mechanism that's called payment for order flow. So they don't make money from consumers, right? What they do is they watch and monitor your orders. They create a data file about that, and they give it to these prime brokerage institutions like Citadel milliseconds before you do the trade. What that allows Citadel to do is if they see a lot of people buying, milliseconds before you buy, they can buy. And that allows them to make money. So to be clear, Citadel is responsible for 47% of all the payment for order flow volume. They paid Robinhood almost $60 million in the third quarter, okay? Plus another, I think, $7.5 million for S&P 500 stocks and $31 million for non-S&P 500 stocks. They paid them almost $100 million in the quarter, or a $400 million run rate. So if we had to summarize all of this in a nutshell, that's what we know. We know that it started out as people debating the true fundamental value of GameStop, and it morphed into a momentum trade where a bunch of folks got dogmatic about a short, a bunch of folks got dogmatic about being long, and the longs won. And in the middle, what happened was a bunch of firms basically decided at some point to gate the ability for people to transact in all of this, which I think caused a lot of economic disruption. And that was because they didn't have the margin requirements. And I think it's because they were insolvent, i.e. Robinhood.
Damn. Crazy.
So that was a really good explanation.
Absolutely.
And it's true. So like here, in terms of how Robinhood gets paid, Bloomberg, I'm on thestreet.com. It says Bloomberg reported in 2018 that Robinhood makes nearly half of its revenue, more than 40%, from high-frequency trading and payment for order flow, a controversial practice used by many online brokerages. According to the site, Robinhood sends in quotes, your orders to market makers that allow you to receive better execution quality and better prices. Additionally, the revenue we receive from these rebates help us cover the cost of operating our business and allows us to offer you commission-free trading, end quote, which is what Robinhood said.
Yeah.
So they're just passing on the information.
Yeah. And, you know, Citadel's getting that.
Firm.
Yeah. And they're getting that information. They're making better trades and doing all types of deals, you know?
Nothing is really free. You say
no.
if they say, 0% or $0 commission, free trades, then they're doing something on the back end. They have to make money.
Yeah, 100%, man. No, nothing's ever free. So there's obviously a way that they're making money. So it's great.
Yeah, dude, crazy. Mm-hmm. So I know you told me about the Elon versus Robinhood CEO Vlad on Clubhouse.
Right.
Which was like, what? I didn't even know that was going on.
So basically Elon ended up sending out a text message in the morning letting everybody know that he was going to be on Clubhouse at 10 p.m. at night. So
what is it, a tweet or a text?
It was a tweet.
Oh, okay.
So throughout the whole entire day, people were on Clubhouse talking about the hype, Elon, and it was a big deal for Clubhouse. It almost just like a stamp of approval. We're having a massive influencer like this get on Clubhouse. So he ends up hopping on that night, and on Clubhouse you can only have 5,000 people in there. So a lot of people, millions of people were not able to get into his actual Clubhouse. So they had overflow clubhouses where basically you could join another clubhouse where they were just streaming what he was saying in a clubhouse. Then all of a sudden you're listening to this mic for like an hour. Then he basically brings up Vlad, the CEO of Robinhood, and everybody's jaws drop. Like, no way, we're about to hear a live conversation with the CEO and Elon, literally in the public platform where everybody was listening to it. And I know you're about to play it right now, but it was crazy, man. Crazy.
Dude, it's like Clubhouse Inception. Well, luckily we have some people that. So right now, I'm on this video from the channel Tesla Dosage.
Yeah.
And I got two like small points where the founder or the CEO or Vlad of Robinhood is talking to Elon. So I'm going to play the first section here.
Okay.
Receives a file from the.
Oh, and then before I play it, so basically Vlad is explaining to Elon and everyone else what went on.
Yeah.
So what was happening. So this is what he says.
The NSCC, which is the National Securities Clearing Corporation.
I'm going to go back a little bit. Sorry.
An activity. And so Thursday morning, right? So I'm sleeping, but at 3:30 a.m. Pacific, our operations team receives a file from the NSCC, which is the National Securities Clearing Corporation. So basically, as a broker, as a clearing broker, and this is where Robinhood Securities comes in, we have to put up money to the NSCC based on some factors, including things like the volatility of the trading activity, concentration into certain securities, and this is the equities business, so it's based on stock trading and not options trading or anything else.
So basically, the NSCC is like it's a clearing corporation. So basically, they just handle all the transactions.
Right. Absolutely. 100%.
Between brokerages.
So they gave us a file with a deposit, and the request was around $3 billion, which is about an order of magnitude more than what it typically is, right? So,
no, why was that so high? Like, this seems like it sounds like this is an unprecedented increase in demand for capital. What formula did they use to calculate that?
Well, yeah, and just to give context, Robinhood up until that point has raised, a little bit, around $2 billion in total venture capital up until now. So it's a big number. Like $3 billion is a large number, right? So basically, the details are, we don't have the full details. It's a little bit of an opaque formula, but there's a component called the VAR of it, which is value at risk. And that's based on kind of some fairly quantitative things, although it's not fully transparent. So there are ways to reverse engineer it, but it's not kind of publicly shared. And then there's a special component, which is discretionary. So that kind of acts as a multiplier. And basically
discretionary meaning like it's just their opinion.
Yeah, it's a little bit. I mean, I'm sure there's definitely more than just their opinion, but basically,
well, I mean, I guess like
it's based on growth.
What everyone wants to know is like, did something maybe shady go down here? Like it's like seems weird that you'd get a sudden $10 billion demand. $3 billion in the morning. Sorry, how much?
Yeah, it was $3 billion US. $3
billion. Okay, so it's $3 billion.
Yeah, around.
Just suddenly out of nowhere. And what percentage?
I wouldn't impute shadiness to it or anything like that. And actually, the NSCC was reasonable subsequent to this, and they worked with us to actually lower it. So it was unprecedented activity. I don't have the full context about what was going on in the NSCC to make these calculations, but yeah, essentially it was a large number. Is
anyone holding you hostage right now?
No, I'm okay. Yeah. Thanks for asking. But anyway, so this was obviously nerve-wracking, and I actually was asleep at this point. The operations team was fielding this at 3:00, and then we got back, we put our heads together. Our chief operating officer basically said, "Look, let's call up the higher ups at the NSCC and kind of figure out what's going on. Maybe there's some way we can work with them." And basically, there was another call, and they lowered it to something like $1.4 billion from $3 billion. Okay. So, we were making some progress, right?
So basically, the NSCC said that Robinhood owed $3 billion to them.
Yep.
But then Robinhood talked to them, and then they came back, and I guess they said that 1 point whatever billion dollars, and then so now Vlad's gonna talk to them even more, and this is what they came up with.
And then, but it's still a high number. And then we basically proposed, well, let's explain how we plan to, let's explain how, we'll manage risk in these symbols throughout the day. We proposed marking these volatile stocks that were kind of driving the activity, position closing only. And then at about an hour before market open, so 5:30 or 5 in the morning, they came back and they said, okay, the charge is, or the deposit's $700 million, which we then deposited and paid promptly, and then everything was fine.
So basically, they settled on $700 million because Vlad and Robinhood were gonna be the gatekeepers that stop the trading or stop the buying for like GameStop and all the other stocks that were being bought. And that's basically what happened, because I think Robinhood, they initially were able to raise $2 billion. So they can't pay $3 billion.
Yes.
So they had to come up with a price or some way to bring the price down of what they had to pay.
Right.
But in the end, it hurt the retail investors because they couldn't buy anything, but they could sell. So that was kind of like, you know, they didn't have enough money to pay their debts.
Right.
That's what happened.
Yep, 100%.
So
that's basically the you know, short story long. You know, that's essentially what it was. You know, they owe $3 billion. They basically had to tell, you know, this company, hey, you know, if we basically shut the stocks down, will you lower the price because we don't have the money to cover it? And I kind of do believe that, you know, to be honest with you.
I mean, that probably, that most likely happened, you know, with
100%.
all those trades going on. At the same time, though, just being a company that's not able to pay off those debts and shut that off,
right?
That is not good either.
No, absolutely not. Absolutely not. So, yeah, I mean, that was just kind of a breakdown of what's going on, but it's been a crazy, crazy journey with this. And, you know, actually they're talking about creating a movie over this Wall Street bet stuff now. So
I wouldn't be surprised.
Yeah, it's nuts, man. So,
hopefully the same director that made The Big Short is making it, because I like that style. It's something with finance. It's boring, but he made it very interesting.
Oh, for sure.
Whoever directed that.
Yeah,
so that would be pretty cool.
Yep, absolutely.
So that's the thing. But anyways, same message for anyone thinking about investing in GameStop. If you want to buy it, I think right now it's at $90. So went from 300 down to 90. So if you want to do that, it's up to you. If you want to ride all the volatility, but you know, you shouldn't. Oh, before we say anything else, we're not financial advisors. We have to say disclaimer. We're not financial advisors. This is not financial advice. So this is only our opinion. So it's up to you on what you decide. So take this for whatever it is. So anyways, like this is in the beginning, those that got in it early that actually did the analysis, that was, you know, they did the actual analysis to invest in the stock. And like Chamath said, it went from analyzing a good company to invest in to hype train.
Yep, absolutely.
And some people were getting in because they heard it on the internet. And
100%.
And they were getting in at when it was like $300, thinking you'll go to 1,000.
Good luck.
Now it's at 90. So it's up to you.
Joke's on you. You know, that's what we call meme stock. So that's on you. But
that's why you got to do your analysis before you make sure you do your research before putting your money into a company like that and going full YOLO.
Yeah, exactly.
But yeah, so this is an interesting topic, and we'll see what happens from here. Yeah. What's the next topic we were going to talk about? Oh, that's right.
The top.
You want to talk about more on like what we do as entrepreneurs and running.
Yeah, absolutely. So the next topic is basically the top 3 things we would tell our younger selves, if we were able to talk to ourselves. You know, like what were those 3 things that we've learned, you know, at this stage in the game, where if we were talking to a younger entrepreneur or our younger selves, what will we tell ourselves to help us reach our goals faster and quicker? So you want to start off, Mike?
Oh, you go for it.
Okay. So basically, when it comes to my top 3 things that I would tell my younger self, to all the entrepreneurs out there who are starting growing their business, or maybe you've gotten to that point where you have grown a substantial business, the things I would tell myself is, number 1, have patience. I know it sounds so cliche, but I remember when I was growing my business and things were not happening the way they needed to happen, and things were falling short, and I was, you know, trying to do a certain thing and that didn't pan out, and different things like that. And I was so tough on myself mentally, emotionally, everything, instead of really calming myself down and saying, you know what, the process is not going to be a straight line to the finish line. It's going to go up, down, around, zigzag, the whole deal. And you have to trust the process, because you can give yourself anxiety. You can really, really do damage to yourself and be hard on yourself if you're not being patient. So I would tell my younger self, be patient, trust the process. Everything's going to work out, and take your time. You know, you see these people on Instagram. I know it gets to your mental and different things like that. And you're like, how come I don't have this? Or how come that's not happening? Every dog has his day, and your time is coming. Everybody's journey is different. So that would be my first thing, is be patient. My second thing is find a problem and ask people if people actually want your product. You know, when I first started my business, I started a business where basically I thought it'd be a cool hobby because I thought it was cool. And that was the complete wrong way to actually look at a business. And when you're really starting to go out and start a business, if you can find an actual problem where you're walking around a house and you wish something was like this, or you wish you had this, or something you do is always, you know, this way, how can it be that way? That's where the best business ideas come from. Oh, I wish I could do this, or I wish I had this, or how come that's not like this? Those three language patterns that happen within your head, there's usually a business idea around there because there's a bubbling problem. But that's not where it stops. You need to ask people if people would actually want your product, or if they have that problem too. So it's a two-part process. So if you're able to figure out those two things when you're a business owner, and just don't say, oh, I think this is cool, the market's going to like it. No, the market tells you if it likes it or not. Doesn't care how good you are, how cool it is, da 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 da. Doesn't work like that. It'll tell you if they like it. So for all those entrepreneurs, you know, that's what I would tell myself. Find the problem and ask people if they actually want it. It sounds simple, but sometimes we complicate it too much. And my third thing would be basically direct response marketing. And I know a lot of us, you know, when we're coming up and we see Instagram, and I should grow the biggest Instagram channel, or I should do the biggest, you know, YouTube channel, different things like that. Those things come in time, and followers don't actually equal dollars. And I've gotten caught up in that in time, you know, and you got to build a sustainable business and have an actual plan and really create a system that generates dollars. This YouTube and everything else is the sprinkle, it's the icing on the cake, you know. And I got caught up in, oh, I have to have the biggest IG or this or that. And I forgot the true art of direct response marketing. If I put $1 out, I want to get $2 back. And having that discipline where something might sound cool and sexy, but does it create money? And never lose sight of that. And those are the three things I would tell myself.
Yeah, that's good. That's true. Followers do not equal money.
No.
Because you'd be surprised, and I'm sure, you know, you see it all the time. There's Instagram accounts where people have maybe 4,000 or less followers, but they're running a six-figure, almost $1 million business behind the scenes because they're building deeper relationships through direct response marketing. And basically, the Instagram is just kind of like the top tier where you meet people first. They get to know you, and then from there, then they get to know you a little bit more, and then you know, eventually purchase your products if that's what they want to do. But that holds true.
You're so right, because you know, you start off, you got to build your business first, or get it somewhere where it's built. Then this will just amplify what you're doing. But if you don't even have the base stuff done, and all you're doing every day is posting on IG, you got to get your business set up. You know what I'm saying? Get that set up, then you can do the fun stuff and amplify yourself, and everything will come together.
Yep, I agree. Yeah, that was good stuff. Okay, my three things. So first one is to what I should have done a little bit earlier when I was like younger, meaning like when I was just starting out the business back in 2015, was to create a vision board and set of goals of where I wanted to take this. Absolutely. In 3 to 5 year plan, but write it down in detail. So first, starting off with like a vision board. I like vision boards. What I mean by vision board, if someone doesn't know what it is, it's basically, you know, you can get pictures of things that you want to achieve and gain down the line in your life. And that way you can visualize it, because visual is very, very powerful. So what I do is I usually have in my computer, you can cut stuff out of the magazines, but it's easier on the computer, finding on internet, whether it be something like, let's say a business, growing it to be let's say a video business or videography business, for example, because that's what I do. Having, video equipment in there, maybe putting in some dream clients that you want to be working with, things like that, so you can see it. And then maybe like a house, if you have a specific house that you want to achieve later down the line, and what your life wants to be looking like. So things like that, and painting that picture, because you can always have ideas in your mind what you think it'll be like, but unless you put it down in physical and you can see it, then it stamps that in subconsciously. So that's one thing I wanted to do earlier on, but it's never too late. So next thing would be finding a community that you can build a foundation on. So for example, because we went to Servite,
I remember
so
that.
with that community, it's a very strong community. And when I got back after graduation from college and went back here, I think a lot of people, if they don't have a lot of money to start out with, if they want to run a business, they don't really think of a group or organization they were once part of and to reach back out to them. So that's what I would recommend, going back to an organization or group that you were once a part of. And if you have a skill or something that you want to eventually turn into, let's say, a business, offer that for free, build that foundation, build a name for yourself within that organization. Because if you know that organization has some people that own businesses that might need your service, it might be a good group to make a name for yourself in and network and get to know people. So that would be one thing. I mean, that's what I did earlier on. But I would get that question all the time. If you don't have a lot of money to start out with, what can you do? And it's always networking, but find a good base. Find a good base that you can go back to and build up from. And then the third one would be invest early. So I invested early, but with one of my other investments, I just put in the money maybe 2 or 3 times, but I put it in chunks. And what I should have done was monthly, just little bit amounts, just percentage, whether it be from your paycheck or whether it be from whatever amount you make. If you're an entrepreneur, 10% or even more if you can afford that, and place that into an investment. So like, for example, an index fund or ETF is what I invested in. So that enables compounding effects. And if I did that up till now, and I think I started back in high school. So freshman year, and I started doing that. And if I kept doing that up till now, it would have been more. But, hindsight's 20/20. But that would be one thing. Have your money working for you, any bit you can. That's very important.
Absolutely.
And yeah, so those are my 3 things.
I love those, bro. Especially the community one, man. How that's so important, and you don't have to spend you didn't spend any money on advertising or anything like that. You just went to your your network of people, and that's how you built your business. And it's don't take no money, it just takes effort and thinking. And that's amazing.
Yeah, and it's just offer, if you have a service that you can offer. What I did was I knew I needed to get my name out there, but I knew that Servite, which is who I started creating videos for, they needed videos for football because we played football before. That's what I knew best. And so it was a win-win for both sides because I need to build my portfolio and I didn't charge them for anything. And all I asked was just to place my name at the end of every video for the season. That was it. So I didn't know what was going to happen, but I knew at least something good was going to happen if I did my best. So that's all.
Yeah. It exploded. That's what happened.
Hey, you know, just tried to keep working on it.
That's what happened.
Hey, I mean, I'm thankful for it. So, you know.
I love those, man. Those are awesome 3 keys. So it's crazy when you look back at life and you know how you've learned different things, and it's just perspectives, everything, man.
I think it's always good to look back a little bit, because from time to time we're so like in a tunnel, tunnel vision, and like you said earlier, it's easy to look at other people and what they're doing and feel discouraged, like, why am I not there? You just got to run your own race. It's good to look up every once in a while and see, okay, I want to eventually get to that point. But you're not going to get to that point if you keep looking at the other person in your lane. You got to keep looking at what you need to be doing. And eventually, when you look up, you'll get to where you want to be.
100%.
But, it's always good to see where you came from and where you're at. Gives you a little bit more momentum.
Yep.
So that's always good.
100%. 100%.
So mindset is the next topic we want to talk about. Mindset shifts, like 3 mindset shifts that has helped us.
So 3 mindset shifts that have helped us. So I'll start it off. So my first mind shift would absolutely be getting good sleep. So I was always the type of person where I really bought into, work a million hours, go to bed at 3:00 a.m. in the morning, screw sleep, just keep grinding, all that type of stuff. Don't have friends, just that whole mumbo jumbo.
Yeah.
And basically, there was a point in time where I just wasn't performing. I wasn't productive, and I was tired all the time. It was just something that was really, really a big deal for me, the whole sleep thing. And I remember that I started to read different books on people who are performing at high levels. And they talked about how sleep is so important and getting into deep REM sleep and different things like that. And I really started to take that stuff serious. And I really set a timer for myself where I would force myself to go to bed at 10 p.m. Then I would get up and make sure I was up by 6:30 and to get a full 8 hours of sleep. And that ended up absolutely skyrocketing my performance. But not only that, it gave me such a sense of discipline, and it gave me a routine where I knew I was going into the day and I was already performing at a high level. And, we just think that, us business owners, what we're doing in the business is important. It's the other stuff that makes such a huge, gives us a huge advantage that we don't even think about. So for me, sleep was massive, and we talked about it before. Definitely get the Oura Ring and really making sure that you're tracking your sleep and getting good sleep numbers, because that can absolutely explode your production. The next thing for me is how closely connected your personal life is and your business life, and how life is a mirror. And for example, if you have a messy car or a messy house, your financials are probably just as messy. Okay. If you're a person who doesn't care about people, you probably don't care about your customers. Life is a mirror. And that was a huge perspective shift when I truly understood that, because your business is a true representation of you as a person. And whatever your core values are going to spill into your business. You can't say, oh, well, I'm like this and that, but in business, I'm different. You're the same way in both. You're not a different human being, So really understanding that if you have issues in your personal life and things aren't being taken care of, they're going to flow into your business life. These lives, as much as we think they're separate, they're interconnected. And one thing I truly learned was basically really cleaning up my personal life and making sure that was in order. Then that flowed over to my business life, and things started to take off. But when things were out of alignment, whether it was in business or whether it was in personal life, business wasn't performing as it should be. So making sure you're taking care of your personal life. And one thing you should take a look at is Maslow's hierarchy of needs, and what you need as a person, to make sure you're having a good life. And that flows into the third thing where a major perspective shift for me is life is not about money, it's about happiness. And I'm telling you guys, as much as you think that money's going to bring you happiness and bring you this and bring you that and da, it doesn't. And you need to make sure that your highest goal in pecking order is happiness. Because you'll get to a point within your business where you think that, you're doing well, things are going right, but something feels off. And you got to make sure that your life is fully a happy life. So that makes sure that you don't isolate yourself. Go out with your friends, have a good time, make sure your personal life's good. Make sure you're in a loving relationship, make sure you're taking care of your mom and your parents, making sure you're traveling, doing those things that make you happy. Business is just a conduit for us to give to people to make sure they're having a good life, whatever we provide in services, but as well, it gives us the resources to have, truly to have freedom. And with freedom, that will give us happiness to do what we want to do with our life. So you really need to make sure that happiness is, ultimately the number one goal for you, and everything else will fall in line, because you can have the best business, but you're not happy, you're going to be miserable. So you got to really make sure that you live a full life and you take care of every aspect. And again, looking at that Maslow's hierarchy of needs and just checking off the boxes to make sure that you're trying to live a full life and you're truly happy. Because as much as business is good, it's the other things that will help you perform to the highest level possible.
Yep, I agree. Because money gives you more freedom.
Yep.
But happiness comes from within.
100%.
So money cannot buy happiness.
Nope, it will never buy happiness. So gotta make sure that's always the focus. You're working to get freedom and take care of your customers. That's what you're trying to do.
Yep, exactly.
100%.
Always focusing on service. So that's very, very important. But yeah, dude, I agree 100% with all three of those things. Sleep, you gotta have sleep.
Yeah.
You have to make it a priority. And there was this one, who was it? It was on the podcast or show, The Passionate Few.
Okay.
And it's a good podcast. If anyone is listening, listen to that. It's really good. One of the guests said that they did a reverse alarm or something like that, where basically they set an alarm an hour before they're going to bed, so that they knew that once that alarm went off, no electronics, no nothing for that hour until they go to bed. So he kind of figured out, all right, if I can't have any electronics, I'm probably going to read a book. I'm going to finish, the dish, cleaning the dishes or whatever else. Mm-hmm. So getting into that routine, which is pretty much what you did, and start off, sleep at this time, wake up at this time, you get into that routine, and with more discipline, that gives you more freedom too throughout the day.
Yes, absolutely.
Less chaos.
Yeah, exactly. What is chaos? Exactly. It's a time sucker. You don't have freedom with chaos.
That's so true. That's so true, because you need to organize your day. And if you're an entrepreneur, if you're running your own business, right, it's different from being an employee. If you're an employee, like, you have time set. This is the time to go to lunch. This is the time to do your work. You have the time set for you. But if you're doing something on your own, you kind of have to create that own structure for yourself.
You gotta be disciplined.
And that is hard in the beginning.
Mm-hmm. It is, Mike.
But it has to be done. Yes,
absolutely. Absolutely. You got to set up a schedule for yourself, man, because you can start flowing this way and flowing that way. And that's why having a schedule for yourself is so important. And like you said, chaos breeds, chaos breeds slavery. That's what it really does. And that's not what we're in this thing for. We're in this thing for true freedom.
Yep. 100%. Okay. So for me, let's see, the first thing that helped was the book Think and Grow Rich.
Nice.
So I try to make a point to read that every year, because something new pops up every single time. I don't know how, but something new pops up, and I'm able to see things from a different perspective, but it's also a good reminder because you tend to forget things, important things, as you go on and you're busy doing stuff. So Think and Grow Rich, it's one of the musts you should read because it's still held the test of time since way back when it was written. I think it was like written back in the 1930s.
Okay.
Something like that, by Napoleon Hill. But everything still holds true. It focuses on the self-mastery of yourself and how to view things, and through setting up yourself subconsciously in a way.
Interesting.
Have you read it? Have you read it, Ken?
I haven't read it yet. No.
You should read it. 100%. 100%. Audiobook or read it, but it's definitely like one of those. It's like a business Bible in a way, I think. So that's one thing. Think and Grow Rich. And the next is, on the topic of positive speaking. So before, when I was younger, I would talk myself down, like, oh, you're not that good. Can you do this? You don't fit in. The imposter syndrome, right? When you get to the next level and you think, do I even, am I like should I be even part of this?
Right.
Because there was times when I got called up to bigger projects with Fortune, I don't know how many, 5 companies.
Yep.
And I'm already filming, I'm directing, and I see all these other directors there that were actually directing the full-on production, but I was doing a different segment. And I was kind of questioning myself, am I directing right? Like, I'm not even in this sphere of the big productions, and I'm here directing actual talent, like big name talent. But then it's always very important to talk to yourself in a positive manner in your mind, because no one else is going to do it for you. So even if you may think you're not doing something right, you just got to do it with the best of your ability. And even if you do something wrong, don't talk yourself down, because it just makes it worse. And that's why now at this point, if I hear someone saying saying to themselves, yeah, I'm not good at that anyways, like I don't, or like I will never do that. It's like right now it just kind of ticks me off, because I kind of had to push that out of my mind right now. That was like another thing too. That's very important. And the third thing is failure, on the topic of failure, because it's that shift of looking at failure instead of failure itself, looking more as an experiment, like you're experimenting. Think of like a scientist. They don't look at their failures as failing. They look at it as, oh, maybe this will get to the next step. It's just, you're not able to see if something works or not unless you experiment, work on it, and if it works, then double down on that. It's always improving to get to the next level. And I think that's the one thing people get so caught up on, am I going to fail? And I still get caught up on that from time to time, but I always got to look at it as it's an experiment. So
right.
That's kind of like the.
Yeah, no, I love those key points, man. Even, I mean, first of all, I'm gonna definitely read that book, dude, because I love that subconscious type stuff. It's so important.
Yes, definitely read it. It's a good read.
Good, absolutely. Well, that's good, man. I love those, dude. I love them.
Yeah. So, yeah, dude, we should talk more. I like how we're like sharing this stuff, because while we give just the everyday trending news, it's good and all, but I like to, and I'm sure you do too, just to share where we're at in our entrepreneurial journey.
Well, it's awesome because you get so much perspective too, even from what you said. Failure is not really failure. It's just It's mindset shifts. It's everything's perspective, man. It's just the way that you look at everything in life. And, you know, we get so in our heads, and it's almost like we look at this small little dot and we don't see the whole entire picture. And it's like this podcast is just peeling back those layers so we could start to get more perspective, you know, so we can perform to the highest level.
Yep. That's exactly right. Because we always talk about this on the phone, on our phone calls, and that's why we started this show. So just to have a conversation with more people.
Yep, 100%. So it's amazing. It's amazing.
Yep.
All right, now we want to get straight to it.
What are we going to talk about now? We're going to talk about Drake.
Drizzy Drake.
Your boy.
Drizzy Drake, baby.
Let me. The topic is on his collaboration of NOCTA.
Yes.
Let me share the screen here. New label with Nike.
Yes.
Can you see this?
Yeah, I see it.
There's your boy.
That's the
Drizzy
boy.
Drake,
Man,
in his NOCTA gear.
His NOCTA gear, man, the kid.
So this is really, really interesting. And you and I were talking about this.
Yeah.
It's kind of like, or similar to a Jordan brand, how he partnered with Nike on this, and Drake is a big brand in himself.
Yep.
And he's creating a new clothing line with Nike, which is smart, which is really smart. These collabs with big companies.
Yeah,
with
absolutely.
artists and athletes.
Oh yeah, 100%. I'm very curious to see. I mean, first of all, you know, for Drake to get, I mean, as a music artist to get a deal like a Jordan or, you know, a Kobe, that in itself is so, you know, unprecedented. And he always talks about, you know, how sports and music are so synonymous, you know, because without the sports, we couldn't create the amazing music. Without the music, they couldn't play the best type of sports. They go so hand in hand. And it was just such an easy play for Nike to see a champion like Drake to start a clothing line with, you know?
Mm-hmm. And the name stands for, it says here, we're on GQ.com, NOCTA named for the Champagne Poppy's nocturnal creative process is an unprecedented partnership with Nike. The sportswear giant has given Drake very much not one of the, The sportswear giant has given Drake very much not one of the elite athletes' Nike outfits, something akin to MJ's Jordan brand, his very own label, with its own name and everything.
Yep.
NOCTA. So it's his own brand.
Yep, exactly. You know, NOCTA by Nike. And that's massive because some people, you know, they'll collaborate for a collection or different things like that. But to get your own, you know, name brand under the Nike umbrella, that's like a Converse. So that's like a Jordan or a Kobe or a LeBron. It's massive.
Yeah, that's crazy. But it's a smart play, though, because, you know, I mean, Drake has his own OVO already.
Right.
But how many people are going to buy OVO? That's his diehard fans.
Right.
Now
right.
with NOCTA, he's able to get more into the Nike sphere with all those other, you know, Nike diehard fans too. And so it's just a smart play here.
Yeah, because I mean, and it's such a synonymous collaboration because, you know, with Nike, with the Jordan brand and Nike, a huge customer base of theirs, you know, are the same people who are consuming Drake's music, a massive, massive portion. The same people who are going to all these Nike shoe launches, who are buying the rare Jordans, who are on StockX that we're going to talk about. This demo is a huge, huge market for Nike. And you have an artist that has absolutely been crushing it, who's been on top for the last 10 plus years, who represents everything hip hop and, you know, is able to collaborate with Nike. Not only is it an awesome thing for Drake, but how much brand equity does that give Nike now to collaborate with such a powerful artist like this? You know, it just, the brand is so cemented within the culture now, where it's hard to compete with this type of collaboration. You know, it's amazing.
Mm-hmm. Yep, that's true.
It's an amazing deal. So yeah, and obviously, you know, Drake loves he always rocks Nike, so he loves kind of that sporty look, and definitely with the, you know, kind of the streetwear type deal. So it's going to be an awesome collaboration. I'm super stoked for it. And I think it's going to open the door to a lot more collaborations of this caliber for other artists in the future.
Yeah. I think a lot more artists are going to be partnering with big brands, and it's going to be a smart play, especially these music artists, because now when they have a big brand big enough, or even if they don't, they can still partner with them because they're a brand in themselves, and they're kind of parallel in line with athletes and how athletes are seen.
Exactly. You know, the athletes want to be the rappers and the musicians. The rappers and the musicians want to be the athletes, you know. So it's just how this game is. So it's so funny. But yeah, it's awesome collaboration.
No. So we'll see how this plays out. It'll be interesting to see.
Absolutely.
And next topic, I know you mentioned StockX.
Yeah.
And this whole new marketplace. And what I mean by that is, I was reading this book, or I'm currently reading this book. It's called, and I mentioned this to you, it's called The Third Wave. And it's by the author is the founder of AOL.com.
Right.
And he talked about 3 waves. The first wave was the internet. And that was like AOL and all those just starting and creating a foundation and seeing if this actually works, which it did. Second wave are all the apps. So Facebook, Twitter, and whatever else. And basically those became like the go-to. Like you have to go to those if you want to get your information and whatnot. Now he's saying the third wave is more a what was the word? There's no centrality. So basically what that means is, like before or currently, a lot of the tech companies are in Silicon Valley.
Yeah.
Now, with the internet like it is, and people can work remotely, everyone doesn't have to be in Silicon Valley if you want to be a tech company. You can be in Texas, Austin, Texas. You can be in Arizona. You can be on the East Coast and set up a company because people can work remotely now. It's decentralized.
100%, my man. Absolutely, it's decentralized. 100%. You know, and that's really the rise of what's going on nowadays with Uber and Airbnb and all these places. You know, Airbnb, you know, is in the real estate business and owns no real estate. It's crazy.
Uber.
Yeah, Uber, same thing.
It's just connecting people.
Yeah, exactly. You know, and what StockX, you know, this resale market is a massive, massive market, especially with the rise of, you know, with Jordan and different things like that, you know, where you're able to go on and resell. These things hold their value just like stocks, and they go up. It's crazy.
Yep. So, quick backstory. I'm on Inc.com. When Josh Luber, co-founder of StockX, was in 6th grade, he started his first business selling Bubblicious to his classmates covertly because they weren't allowed to chew gum. So Josh Luber is the co-founder of StockX, and that was a quick backstory right there and how he started. And now StockX is valued at $2.8 billion.
Wow.
So it raises 275 million Series E funding, is now $2.5 billion, which is crazy because it doesn't own any inventory.
Wow.
And so the founder, in one of his interviews, he was saying that he saw the value in these shoes, and these shoes that they have on StockX, they cannot be worn or anything. So they just have to be pristine. They have to be still in the box and things like that. But he basically created a stock market for shoes and now other items.
Right. Absolutely.
And you can see that there's ticker symbols right here for, let's click on this thing.
Cost going up, cost going down, values.
New Balance, 997 Concepts, luxury. And it has here, ask price to sell and a buy price.
Yeah.
So this one's it's to buy, it costs $258 and to sell $265, just like the stock market, but for shoes. It's crazy.
Yep. It's nuts, man. It's crazy. You know, it's absolutely nuts. Like, just the fact that people are buying and selling these shoes, I'm telling you, this streetwear market, especially the shoe market, is so massive and they hold their value. You know, it's crazy.
Yeah. It's like because, you know, in the stock market, there's commodities like gold, oil, things like that. This is its own commodity market here. Shoes and other items too. You got streetwear.
Yep.
Supreme, Bathing Ape, Cactus Jack, and there's what else? Electronics.
Yep.
You got the PlayStation 5s and all these other items here too. So it's a marketplace that owns nothing but sells everything.
Yeah, exactly. I love to be in that position. I own nothing and I sell everything. Now, that's a hell of a position to be in.
But if you look at it, all these big giants, Amazon, same thing, StockX, what else? Uber, and Airbnb. They just connect people to things, to services.
100%. You know, so I think if you're a business owner right now, you're thinking about that next wave. I mean, that thing that you told me about, you know, about that third wave, right? And really it being something where you don't own it, you create and you curate, you bring people somewhere to solve some problem. I think if you're thinking about creating a really disruptive company in the future, having that concept in mind is going to be, you know, huge.
Yeah. It says here, the market for resale sneakers and streetwear in North America is estimated to be $2 billion.
Wow.
This is Inc.com.
Jeez.
That's a big market.
That's huge. That's absolutely massive, dude. Wow. This is crazy.
So I think these are the two founders here. CEO, or wait. Oh no, CEO Scott Cutler is an executive at has been an executive at StubHub, eBay, and the New York Stock Exchange.
Oh.
And
so he's been in this game for a minute.
He's a CEO, but the other ones, this is the founder right here.
Got it. Okay, makes sense. Wow, that's crazy. Well, it's a massive market, man. He hit it right on the dot, and I think if you're starting to create a business, you want to disrupt a business, it's got to be something like that.
Yeah. So I think I don't know if these are both the co-founders, but I could be wrong. But it says here CEO before you joined StockX, so I don't know. But,
yeah, absolutely. I'm not sure either, but they're making a lot of money.
A lot of money. So that's something to think about.
Yep, absolutely. Absolutely.
Do you have anything else on your mind?
You know, I thought this was a good show. I think starting off the episode with that Clubhouse was awesome.
we got sidetracked with the Clubhouse. We thought that we can just play this through, but people just kept asking questions. So
people kept asking us questions. So definitely get on Clubhouse if you're not on Clubhouse. But
yeah, we still have that thing, right? Like if you want to be part of our Clubhouse and want to get that invite, comment below. One of the best comments that we like, we'll choose, and then we'll add you into the Clubhouse.
Absolutely, 110%. So, no, guys, I really appreciate you guys tuning in and listening to us. I thought it was an amazing show today, Mike.
Yeah, 100%. I say 100% a lot, but it's true. All right. I'll see you guys on the next episode. Ken and I out.
Peace.
2 feet in.